very critical. So say on this put entry that we took, right? That's obviously banking. We're gonna go. So now that we marked out our say support levels, right? So support levels, if we're in the puts, support levels would be the levels we want to pay attention to in order to figure out when we want to take profits, right? When we want to kind of take profits. But always you want to pair these levels with percentages. So you typically, you guys should have this noted, what you should follow, or pay attention, like you guys should have this noted, is typically when your position is up more than 30%, you want to take profits. And then if you can leave some runners, leave some runners. But typically, when your position is more than 30, depending on how you trade, but most traders, this would work for most traders. The way they trade is when your position is up more than 30%, typically you want to pull in profits. When it's up 50%, you should for sure start pulling in profits. So now you align those percentages with the chart. So say, remember I said right here, our position would have been typically up 40%. I cut 3 out of 5 contracts. So I'm out majority of my position, but I leave some runners to follow the rest of my targets here. If that makes sense. So now that I've marked my taking profit levels, right? Because we're in puts, since we're in puts, we're looking for support levels. What we need to look at now is, say before or right as you enter your position, you can also do it right as you enter your position. But before you enter your position, say you're going to take some puts, you want to mark, okay, what is the resistance levels? And we can kind of see here. Let's make this zone here. Let's delete this. This is kind of, no, actually, we're gonna need that. We're gonna need that right there. Let's just type into here. I think this will allow me to type support. This should allow me to type. I don't know. Oh, there we go. Let's make it white. Resistance. Support. Can you guys see that? All right, so we can see this is a resistance level. Why we can tell this is a resistance level? Even before this candle formed here, like let me go do a replay. Let me do a replay here. Even before this candle, whatever happened here happened, we know this is going to be a critical resistance level. Now, I'll tell you why. It's crazy how everything aligns. Everything just aligns so perfectly here. Previous support, right? If we break below previous support, so currently, before this became resistance, let me fix this text. Before this became resistance, so if we're looking at it from this time frame, right? From this moment, we can see this level was a key level support. You can see price was kind of using this range as support. Price was rounding out. Remember, rounding. Price is kind of rounding out here. So this was a key level support. Not the strongest support yet, but it is a key level support. As you can see, price action kind of consolidating at this level, bouncing off this level. So once that happens, doesn't mean how we can use this information to our advantages. If price breaks below this key level support, if we break below this key level support, here's an important rule. When price is breaks below a level of support, that level of support now becomes resistance. So this level here goes from being support. Let's hold on. Let's go a little bit forward. All right, price broke. Let's go back actually a little bit. All right, price broke through this level here. Now this level is no longer support. Well, it's still kind of, all right, this level goes from being a support level to now a key resistance level. Same thing, like remember this level here. When price breaks through resistance, that level now becomes a critical level of support, right? A critical level of support. And it remains true because if we go up a little bit, we can see we bounced off this critical level of support. So if we were taking shorts here, if we took a short here, we would want to trim at this critical level of support. Now, once it breaks through, what other level would we be looking at? We would be looking at this level here as a critical level of support of where support could bounce. So we want to make sure we take profits heading into this level. Now, remember, if you break through a critical level of support, right? Price breaks through a critical level of support and we're below that level, this level is now a critical level to pay attention to because this level is now a level of resistance, as you can see. Right? So if you're in some runners, you can kind of wait to cut your runners after this level gets tested. Does that make sense? Now, if we fast forward, here, right? Once this candle forms here, or I would probably enter here. So once I seen, so now say I don't have any position. Say I don't have any position. 0. I would enter off this rejection here, right? And if I enter off this rejection of this candle, my stop loss would be a break above this resistance level, because if we break above it, then that means this level is no longer a resistance. It's going to become a level of support. So my stop loss would be right here. And if you align everything together, this should be no more than a 20% stop loss here. If you no more than 20% stop loss, depending on the time frame, of course. Typically, you wouldn't want to enter on a 45-minute time frame. If you're looking for an entry, you would go in to the 5-minute or something. So 45-minute is just good to find support and resistance levels. That's what it's really good for. Honestly, any time frame that's bigger than 10 minutes would be good. You can use any time frame that's bigger than 10 minutes. It will all line up. Just whatever helps your brain kind of see these levels a lot better. So really any level larger than 10 minutes, any time frame larger than 10 minutes, you can find some pretty good support and resistance levels. Now, I want to say this as well. The bigger the time frame, right? The bigger the time frame, the more those support and resistance levels, the more meaningful they are, because basically they're more battle tested. Those levels have been tested a lot more over time, and they've remained true a lot more over time. Now, when it's a smaller time frame, it hasn't been tested as much as these larger time frames, like the daily time frames, etc. Now, let's go back to what I was saying here. I see this rejection off resistance. I'm like, okay, this can be an opportunity to short. I get in. My stop loss is a break above this resistance zone, right? I could probably make it even smaller. I would say we break this level. If I want to be more conservative, my stop loss is very tight right here. If we break above this level, there's a high probability. Remember, in trading, you want to think of probabilities. There's a good probability that this trade goes higher, continues to go higher. And what will this form? If you line everything up, this would form a higher low, which would be bullish structure, and the price would go ultimately higher. right? You line this up with the gamma nodes. If you use it how I said you should use it, then your box should be pretty accurate. Now, someone said when pushing or rejecting zones, do you wait for a candle close? Yes, I always wait for a candle close because until that candle closes, um, it's not over, right? It can push above that price. So if we go to real time, am I still in replay? No, I'm not in replay mode anymore. But this trade makes sense, right? We went through this trade in real time. If I took in this trade, we went through it in real time. Did everyone kind of make a sense of that trade? So we went through a stop loss, how I use the chart to find my stop loss, how I use the chart to align my stop loss with everything else. If I'm losing some of you guys here, just let me know. I know it can get a lot of technical, but this is a key part of trading if you want to be profitable. And Trade Echo provides a lot of tools that should help you be very profitable. And if you align all this, yeah, I mean, before this move even happened, we kind of said it was going to go down. It looked like, and it is going down. So, any questions on that? Anything you guys want to ask before? You guys kind of are getting the support and resistance levels off for puts at least. So that's how I will that's how you look at support and resistance levels when you're taking a trade to short anything or for puts. How many screens do you use? Just keep an eye on all of them. Really, if you're gonna be telling, all you need is one screen, I would say. You can use a time frame. You can look at the time frame like let's say you can use a 5-minute time frame. And then if you're looking to tell somebody, use a 5-minute time frame. That's a pretty good time. It's a pretty good time frame, I would say. 5-minute to find. You can see rounds out prices kind of round out, especially if you're telling. But if you're doing your own trades, I would say you want to typically look at least the 30-minute, at least 2 screens, at least be able to look at 2 charts. You're going to be looking at one for your larger time frame, and then you go into your smaller time frames for your entry. So if you're typically, you would want at least 2 screens. One to find key levels, right? A larger time frame to find key levels and to kind of see market structure, and then a second time frame to kind of find your entries. I would not use the 1 minute unless doing your own technical. So I have a video on technical analysis, and if you just replay this video that I just went through, replay on YouTube what I just went through, you should get it over time. Like, just literally is that simple. Like, if you just follow the fundamentals I said if you just go back to this video and follow these fundamentals, you'll be able to spot them out. Just find a time frame that helps you spot these critical levels out. But if you want to tail, use the 5-minute time frame. Definitely use the 5-minute time frame. It's just like the best in between. Is there an amount of time you would get out if price out? Yeah. So for theta decay, I don't know. I would kind of only get out if based on levels, basically. If it's chopping and my stop doesn't hit. Look, so this is critical question here. So he just asked a question. Someone asked, is there an amount of time you would get out if the price stalls or chops to avoid theta decay during scalping? This is gonna all come down to sizing. If you're not oversized, then you wouldn't be worried. But if you are oversized, then the choppiness and all that will start worrying you. Unless you're an hour, unless you're 30 minutes from expiry, from your contract expiring, then the chop stops loss should be 35%. So if you're approaching that level, you have to make a decision. Do I cut this trade and then look for a reentry do I look for a reentry? So as long as you have proper sizing, support and resistance levels. Can you so as long as you have proper sizing, you'll know how to manage that position. Yeah, follow the numbers and stops. Yeah, don't if you're worried about if you start getting nervous and feeling any emotion, that's your body telling you something's wrong and there is something wrong. It's your size. Okay. I think for the puts at least, I think I covered everything like yeah. If I didn't, then you guys let me know now before I move on to how to approach calls when you're taking calls for stop loss and taking profits. I'm not getting very complicated on this. I think this is pretty simple if you match it, if you can probably eyeball a lot of this because I know a lot of people aren't going to be on the charts all day. So they kind of just hop on the charts on the screen real fast, can eyeball support and resistance, then just kind of align everything to tail a profitable trade. To not be so lost, right? How can we determine the gamma flow? Should I use the price levels on like yes, combine the gamma nodes, the GX nodes with price action and you'll be extremely profitable. This is an amazing tool. Super amazing tool. Look, it gives you a lot of information here that you can pair up to use with the chart and narrative to find a profitable trade. I noticed you're more confident on taking puts than calls. I mean, not. I make money on calls as well. It just hasn't been a market. Well, I mean, puts has been working. If you look at the overall trend of the market, let's look at the daily. Just been kind of, I would say, choppy to bearish lane, right? I bet if we were in this market, though, I'd take calls. But right now, there's a lot more red candles and choppiness than there is green. So there's a lot more red candles than green, right? So I think I try to approach the market with what bias will make me the most amount of money today. And so far it's been puts. But that's just my strategy, right? Like let's say C-Blast, he finds the best call setups no matter what day. And it works out for him great. All right, now for calls. Now I think price can start bouncing here. Hopefully, let's see if it does. So for calls, if I'm looking to take a stop, okay, let's use this time for I can find us a good spot right here. All right. Be a good entry on calls. Typically right here. All right, say I'm taking calls. Say I'm bullish on this current market structure, right? We are currently above this key support level. We are bouncing, consolidating a bit. I'm like, okay, next time, I literally to make it very simple, what I look at when I'm trying to enter a trade is I look at where can I possibly enter that will be closest to my stop loss. Like where can I enter on the chart that if it goes against me, I can know very fast. So basically we see this pin bar, right? Pin bar here. Let's go to the smaller time frame. We kind of see the support level being respected, making higher lows. Remember, higher lows is bullish. We're making higher lows. I'm like, okay, I'm gonna take a call setup. Now, how would I take this call setup here, right? So I'm gonna be like, okay, this is a wick. I don't want to enter here. I'll probably wait for the next candle. Okay, boom. I enter here, right? I enter once we break above this wick here. I enter because this could be a mini resistance level, as you can see, mini resistance level. We broke this resistance level. I enter here. Now, where would my stop be? Okay, gets a little tricky here. Or you can also enter, like if you want to make it even, it's gonna like better stop loss, right? So if you want to have a tighter stop loss, say if I entered right here, right off this bounce right here, I would have a 10% stop loss because my stop would now be at a break below this level here, because this would be a support level, key support level, as you can see on a smaller time frame. It's a support level. We wicked off of it. We kind of rounded. Remember, we rounded off this level. So basically, if this support level broke, then I would stop out. So I can enter here and have a tight stop. Now, say if I want to enter at a break, like a breakout, say this would be called a breakout trade entry. Say if I enter off a breakout of resistance, I would move my stop to where it's typically harder. With this trade, I would have to, let's see, we would have to find a key uh, support level that would have to be broken. So as you can see here, this level, if you kind of eyeball it, pay attention to this level here. This was a resistance level. You can see price rejected here, price rejected here, price rejected here, right? It's kind of a range. This is a range where price has been rejecting. Now we broke above it, right? We broke above it here. So now this is a level of support. We broke above this resistance range. Now this is a level of support. So basically, if price breaks below this level, typically I want to be out this trade because the trade got invalidated. The trade setup is now invalidated. So I entered here, a break below this level, the trade would become invalidated. Now, something I want to be aware of though, that's why entry is very important. It could also bounce off this level. So I would want to have a 30% stop loss because this is the support level. So if I enter off this breakthrough right here, I enter right here as price is going to break through. My stop would probably be a little dragged out. So it'd probably be right here. So the bottom of this, let's just move this a bit. It'll probably be like right here. So this is my stop loss. This is where I enter. Now, where would I take profit? I'll let you guys think about that for a little bit. Give you guys like 30 seconds. Think where would my first trimming level be? And let's see if you got it right. All right, my first trimming level. Very simple. Of course, and I do want to say this as well, I would also look at the gamma nodes. So let's pretend that let's pretend that there's a positive gamma level, gamma of really big call wall. Like think about like a wall right here. There's a positive gamma level, GX level right here. So why I say right here, this would be where I first trim at, right here. Now the reason is out of first trim here because you can see price just keeps wicking around this range. So risk management wise, probability wise, I want to get out of my position and around this range to avoid price also wicking on me and then not making any profit on this trade. So we can see price is kind of wicking in this range. That means it's a form of resistance, right? You can also be a little more aggressive and you can make it your take profit be in this range, which is okay as well, right? But if you want to be conservative, you can make it off this wick. Remember, pay attention to the wicks. The wicks are very important. Wicks is like the key thing for support and resistance, the wicks. Now, my final TP area would be at this range here. This would be the range where I look to kind of take my full profit. Unless there's a catalyst or for whatever reason, I would aim for these targets up here, which can also happen. This would be the next resistance level that I'd take profit at. But typically, I would trim here, then trim here, right? I would trim at key resistance levels where price tends to wick from. Does that make sense? So I'd be looking to get out there. Did that make sense to everyone? Why I chose those take profit levels? Let me see like a couple thumbs up or something, and then I'll move on. So I just went over stop loss and I went over take profit. Now let's see what happens to this trade. I honestly don't remember what happened, so I'm not cheating or anything. I did not go over this. Let's see what happens here. Oh, 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 oh. Look what happened here. Oh man, we took profit a bit too early there, right? So you can see, but you can see in real time, right? If we go back, remember, we gotta think of psychology here. This was literally the first level where I said I would trim at, and you can see price started rejecting off that level. Now, if you're in this trade and this happens to you, majority of you guys are gonna start freaking out. So for your peace of mind, trim some here. Don't sell. This is why you don't sell your whole position. You trim some here. Now look what happened at our next key level that hit. Boom. Price started wicking. I didn't cheat. I didn't see this beforehand. But you can see price started wicking. We rejected. We pulled back here. Now for inexperienced traders, this is when you kind of want to start locking in gains. Now remember, you always leave some runners. Look, price started rejecting off this level. Runners are very important because look what happened. We rejected hard. Like I didn't cheat. I didn't know that this was gonna happen. It just magically worked exactly at the levels that at the ranges that I drew out. Um, like these levels really work. These levels aren't made up. They have backing on them. They work. I'm not even seeing the gamma, right? If I had the gamma, I could be a lot more. I could have probably said, okay, maybe based on the market maker's flow, I can be a bit more aggressive and then target these levels. But right now, I'm kind of blind. I can only trade with what the chart is telling me with price action. So then we can see literally off our first trim, it rejected perfectly. Off the second trim, rejected perfectly. Now let's see what happens when price breaks out. Price broke out and then it just flies. Look. Let's see. Yeah, then price just flies. Boom. And that's why runners are important. This is why runners are important. You guys saw that in real time. This is exactly why it's crucial to have runners. Because if I say I trimmed 75% of my position here, I would leave some runners, and the runners would pay huge. The runners would pay huge. Now look what happens when this level. All right, let's go back. Some support and resistance again. Remember, this level of resistance is now support. So this was resistance beforehand, right? Now it's a critical level of support. Now look what happens when price breaks through this critical level of support. I already know what happens here because we took a put, remember? So we took a put around this area. So price, look, and then look at this again. Look at this again. I'm giving you guys a cheat code here. Price breaks through this level of support. We come to test this range of support, and we reject again. And there's a continuation. Boom. Rejected again. Continuation. Broke this level of support, and then price took a shit. Boom. Simple. Very, very simple. Does that make sense to everyone? How that played out? 68200 was a level. 68200. Yeah, it was a level of resistance. As you can see here, we wicked. If we made a range, it would be around this range. So boom, literally in real time, I didn't cheat. I didn't do anything. we took two trades here that that we literally using support and resistance levels played it out perfectly, knowing nothing else. Just support and resistance. You guys seen that? And then we broke through again. And then I don't know where price is at now, but whatever. Look, it's rejected off previous support, which is now resistance. So that's how I would play calls and puts when I'm in a trade. So three things that we went over. We went over support and resistance, how to identify when to take profits and where stop losses should be, and why we should have multiple contracts. Did that make sense to everyone there? How far do I go back? I usually I mean it doesn't really matter how far you go back. It's just what's happening in that moment. I think real time's the most crucial thing you can look at, real time price action. So within you can see this, I was using whatever levels were there, right? I didn't really look at the time. This is from a couple minutes. This is from yesterday, and it was still very, very how do you say that? It was very, very critical today. This is from yesterday's price action, but it played a critical role on today. How do you pick the strike for a put or call? Is it purely that for a put and call? Let's just say for a put and call, how I pick my strike is unless VIX is going absolutely insane, I would typically try to aim for a strike around my target. So say, of course, we wouldn't be trading BTC, but say we're trading Bitcoin, we're taking some Bitcoin calls or whatever. And my final target was 67,800. This one might be a little too far out the money. So let's just say 67. My target is 67,600. I would look for a strike around 67,600, maybe 67,700, right, to find in between. But just typically, I would find a strike that's near my target and take that strike. Like that would make the cons go in the money. Did that make sense? So just finding a strike, any strike around my target level should be fine. Majority of the times. So my target is 6,700. A strike like 6,700, 6,750 could be fine. Now if I'm really bullish, 6,700 might just work as well, but it's a little far out the money. So we went over that. Before I move on, okay. Well, I feel like this has been a great session so far. I'm loving this session. What about you guys? How are you guys feeling so far about this session? You guys, has this been valuable to you guys so far? If not, what do you guys need to see? It's good to hear. Good to hear. I think we went over the best ways, technical analysis, how to use technical analysis and dealer edge to kind of find where to take profits and where to find your stop losses. And we went over on why it's so critical to have multiple contracts and to have runners. And then originally, before we even started this, we went over the psychology on what's affecting what goes through you guys heads, right? The fear. What's fear telling you? That you have to fix your sizing, that there's something's wrong. Yes, it's your sizing. And the defeatist mindset when you keep getting stopped out and the trades are going against you, and how to avoid that defeatist mindset, right? Um, I took that trade, Stir Chef, was a straight narrative trade. That was not a technical analysis trade. I used technical analysis to find my entry. I did, but it wasn't based off technical analysis. Technical analysis is perfect to find your entries and to find your exits. But what I did was I waited till we tested a key level of resistance and I had my narrative. My narrative was basically that the Supreme Court had ruled the tariffs. I mean, I wrote it in the chat in real time. Like I said, short this pump. Basically, the Supreme Court had ruled that the tariffs, whatever, they ruled against the tariffs, right? But then Trump came out later saying that he was going to speak at 12:45 and that Trump had a backup plan. So basically, what that narrative means that there's uncertainty, the market doesn't like uncertainty, and that this pump, basically the certainty that the Supreme Court had given us about tariffs, got taken away by Trump. So we ultimately pumped off that certainty that the Supreme Court gave us, but then it was again taken away by Trump. So why are we still at this price level, right? Price should correct itself. So I waited until we tested a key level of resistance, and I'm like, okay, this is when I would enter and have good risk reward for price to correct itself. And that was straight narrative. That was a narrative trade. Mm, Um, Thankfully, I was correct, but if I was wrong, then I wouldn't have been a winning trade. But I was correct, and I knew the move was going to be pretty big, and it was. So that's why I took that trade. Can you show us how you place your limit and stop orders? I might have to log in with my personal information there. Let me see something. Let me see if I could do something else. I'm gonna, I'm gonna legend order. Okay, I will show that at the end because I'm almost done. I have one more thing to go over, but I will show the Robinhood legend. Let me just show it then. Okay. Before I go over the last topic, actually I'll hold it. I do need to use the restroom. It's gonna be 2 minutes. You go get a drink or something. I'll be right back. I'm gonna go just use the rest. I just have to take a leak real fast. So it won't be too long. I'll be right back. I am back. All right, now we're gonna be going over the last topic of this session. The last topic of this session. Let me just get this to being a little. Okay. I have some graphics here to show you guys. Let me just try to pull them up here. File. All right, so what I'm going to explain to you guys is the last thing we're going to be going over is the numbers. We're going to be going over the numbers on no, I did wash my I did wash my hand. All right, we're going to be going over the numbers. It's just my restroom is near the office, so I did all right, whatever. All right, now we're going to all right, why stops and take profits decide everything. I am a firm believer that people lie, but numbers don't, and it's important to look at the numbers, and the numbers will prove beliefs, right? We're not just gonna be um, blindly believing that these things work or whatever, right? We're gonna look at the numbers and the data, and we're gonna be running through that data. we're gonna I'm we're gonna be I'm going to be showing some simulations and models that institutions use to show you what percentage you need based on your stop loss and take profits to be profitable. And what that is going to show you is that if you fall short on either stop losses or taking profits, you better hope you have a perfect win percentage. And everyone knows in trading that's nearly impossible. I'm not going to be I oversimplified these models to something very very dumbed down and very simple because who wants over complexity, right? So these are very complex things that I just made it very very simple to understand. The first model is going to be risk to reward. What you risk to what you're risking to lose versus what you're trying to gain. The concept is super simple. Every bet, every trade is a bet. Risk equals how much you'll lose if you're wrong, but that should be your stop loss. Reward equals how much you'll make if you're right, your take profit. why this decides everything as to match your risk to reward. If you're risking a lot to make a little, you must win almost all the time to not go broke. Like, think about that. Like, you have to have a high win percentage, which is very difficult to have in the markets. If you're risking a little to make more, you can be wrong more often and still profit. So for those people who are full porting or for people who are oversizing and all these things, you don't have to be doing that to make good money in the market. You just have to manage your risk appropriately. A real life example is if you risk $100 to make $100, if you win 5 and lose 5, you break even. So you need to win about half of the time. You'll still be up. You'll still be up around 33%. Now, this is where a lot of people go wrong, and this is what I see a lot in this chat. Oh, the numbers in the screen is not visible. Oh, let me pull up the graphics. I don't know why they're not showing. Hold on. Hold on, wait a minute. I don't know why these graphics aren't showing here. Wait, one moment. What's going on here? Oh. Thank you guys for letting me know. I thought the okay. Try to pull this up. Hold on. Why is this not appearing here? Wow. Open it. Man, this is being a bit annoying. Let me see if I can put this here. All right, there we go. I have another one to show as well. These are some models that I ran, and then I had Google Gemini make these hyper stop losses. I had Google kind of make these for me. I have one more graphic here shortly. Hold on. Sorry about that. All right. So it's kind of like a visualizer you can use here. Let me go back to the last example. All right, this is the last example. This is basically the last example before we run into the simulation that I ran. Before we go into the simulation that I ran. This is an example that I see a lot of people in here happening, right? People are say someone is risking $200 to make $100. Now, one loss wipes out 2 of your wins. And that's what I see people going on here. People are risking huge amounts of their ports to only make 1% of profits. Now, imagine if you're wrong, if you take a 30% loss, that wipes out months of gains. That wipes out months and months of gains. Just think about it. So say if you have a $10,000 port, you're risking $1,000, and then when you win, you're only making $100, or let's say $300. But when you lose, you're losing $600, $700. If you run a simulation like we did here, right? We ran a simulation right here. The people, and I accounted for slippage. These are very complex models. I accounted for a lot of things. We ran 100 trades, right? So with these 100 trade simulation, we start off with $1,000. No, so we're starting off with $10,000, $1,000 per trade risk, right? So 10%, you're sizing 10%, but your stop loss is negative 30% in case A and then negative 40% in case B. But when you win, it's 30% on both of the cases, right? So in case A, you can see that, and this is with the 55% win percentage, right? 50, this is like a pretty mid win percentage. It's not really something you're like. The reason I have the win percentage so low is because we're accounting for a lot of things like that we're not adding in the simulation, because we're not adding slippage, we're not adding fees, we're not adding all these little things that can happen. So I'm giving us the lowest possible, basically a coin flip, right? 50-50 to account for all those other risks that I'm not accounting for, slippage, etc., mental, whatever. So if you have a 30% stop loss with a 30% take profit with a 55% win rate, you're making 12K over 100 or over 100 trades. And you're only positive because of that extra 5% win rate. If you take away that 5% win rate, you would be net negative. Realistically, it would be net negative no matter what you did. And this is with 30%. And I promise you, people are probably not even doing this. They're not even following a neutral TP and stop loss. They're not even following that. So for case B, this gets even worse. Someone who has a 30% take profit and have a 40% stop loss. And this is with a positive win rate, right? With a positive win rate. Their account's basically zero. They started off at 10K, now they're down to they're down 8K, $8,000, right? They lost 80% of their money with a 55% win rate. So now let's look at how you should be managing risk. Okay? You're starting with a 10K account, same thing. You're betting 10% per trade. That's $1,000. Same thing as this one with a 55% win rate. Now, I the win percentage is this. So basically, it didn't add it on here for some reason, but basically what I put here is the stop loss. Your profit would be 50% and your stop loss would be 30%. So with the 50% take profit whole, right? So when you're trimming and everything, the average is 50%. And then when you're losing 30%, right? So with just that little 20% difference you have in the take profit and stop loss, if you're disciplined, with the 55% win rate, which is not really the best, you're coming out positive every single time. So the likely outcome, you'll take that $10,000 account to a $75,000 account in 100 trades. The worst case, right? You'll take 30,000, you'll take 10,000 to 30,000 in 100 trades. That's worst case scenario. And then this is the Gemini kind of, AI is not the best with it, but basically this would be the likely outcome. This is the best outcome, and this would be the worst outcome if you follow a 50% take profit and a 30% stop loss, right? So when we talk about 50% take profit, we're talking about like in whole, because you're trimming, right? So say if you trim at 30%, you trim at 50%, and then you leave your runners until they go 100% plus. Your average should be around 75 to 50%. And then if you're following a strict stop loss like 30%, then your numbers should be looking like this, right? But if you're not having good risk reward, how we went over, then this is how your numbers are going to look. And this should be this is over 100 trades as well with the 55% win rate. Realistically, it should be a lot worse than this, like if you're lucky. So this is why risk reward is so important. And I have the script to this model. If you guys want to see how to run these models on your own, I can send you the script. It'll tell you what to do. Let me type in the script actually in the chat for you guys. Hold on, I'm gonna type this script in the chat. You guys can run it on your own, test it on your own. I made the script very simple. Very, very, very simple for you guys. Let's see. All right. If you guys want to see. type it here. If you guys check the Discord, I'll put it in Market Talk. Audio cut out. Never mind, it's back. Okay. If you check the Market Talk, there's a script. You guys put that prompt into whatever LLM you guys use, and then you guys can plug in the numbers there. And you guys can see what risk reward you should be following in order to be profitable based on your account size, etc. So now we can see in real time that the numbers are backing up. The numbers are backing up what we're saying here. Why risk reward is so important. Any questions on that? Any questions at all? Anything you guys are confused on? As you guys can see here, we just rejected another support level and we're going down lower. You can't make this up. Oh, this is a replay. Wait, no, yeah, we're out of replay. These levels are the most important thing you can learn in the market. How do we use Algo Edge? So in Algo Edge, I do have a video posted on that. If you just look at the Trade Echo YouTube channel, you'll see I go over all the Algo Edge. I go over the Algo Edge tools. So just make sure to look at that video. This is with the 30% stop loss, 50% take profit. Yeah, I get it. Yeah. Yeah, so this one is with the 30% stop loss, 50% take profit. This one is with 30%, negative 30%. And this is what the only reason this is positive is because it has that plus 5% makes you somewhat positive. But this is not good risk reward. Like I know sometimes this is not accounting for slippage, mental slippage when you lose 60% on a trade and big drawdowns, right? And this one, this is basically zero, which is really realistic. That would happen if you have this type of asymmetric risk reward. And this is how your risk reward should be looking, right? 50% on your gains, 30% on your losses. And how you do that is with runners. How do we get a super high win rate, 80% plus? Mastering the markets, doing your time. I mean, it's realistically no one has in the markets has a really amazing win percentage. It's typically not. It's really hard to do that. But what people do in the markets really well, how they make so much money, is when they win big, and when they lose, they manage their risk appropriately to where those losses don't really make a dent in their account. That's how you should be looking at it. You shouldn't be trying to win every trade. You should be trying to have proper risk management to where your winners are just making more than your losers. And you'll win. You'll win the market. You'll beat it. It's that. You will. And then if you want to test different numbers, you have the prompt there. So you guys can plug that into a large language model and it'll guide you through it. Any questions you guys have here? I basically covered the psychology, technical analysis plus algo plus the dealer edge and the numbers. We went through the numbers, right? We went through the numbers on how. Can you touch or allude to what you mentioned that is your personal edge that you're not necessarily basically, architect, if you've watched all four of my if you watched this video including the other three and you connect everything together, you could find my edge. You can find everything to how I trade typically. If you combine all these videos together. So the structure of how you act within a trade, capping loss and leaving runners makes the math work in your favor even without. Yeah, literally, it's all about like the math, right? Everything is math. So mathematically, if we follow this, if we follow the structure in the system, right? We want to be a system. We want to be trading a system, not emotions. We don't want to be trading at random. We want everything. We want to control as much as we can control. Yeah, leave some runners and then have those runners stop loss at like 10%, 15%. You consider volume as an indicator. Yeah, volume's a critical indicator. Yes, of course. Yeah. Very important. Match volume with order flow with dealer algo edge, and match algo edge with everything else, and dude, you'll be extremely profitable. One thing I want to point out is I looked at Bitcoin for this BTC chart for 1 second. We were up here, and I could tell the price was gonna go down. With enough experience, you guys should be able to tell that. So when you guys are gonna tell a trade, you look at the trade for you look at the chart for 1 second, you're like, okay, I agree with this trade. You get in the trade. And it's that simple. So eventually, you guys, with enough experience, you guys will be able to tell that too, right? I looked at this chart for like I don't know how long, but I was able to tell that it was gonna go down. And any questions you guys have? Who's your favorite friend? I don't look at Vint Twitter. I only have the two people I look at on Twitter. Um, is gonna be just the financial juice and Walter Bloomberg. But I just do my own research on the market. If I'm ever lost, I don't have X. I mean, I have X, but I don't do anything with that. Um, if you, I just don't post on there on X. It takes a, but follow Ed Blast on X, and then you'll see me there pop up there here and there. So just anything Trade Echo, that's where you'll find me. I don't not on X or anything. But what I was going to say is, I think it's very important to not listen to so much noise. Make your own conviction, have your own conviction, be knowledgeable, do your own research, and if you have your own research and you follow the data, follow the numbers, and you'll be confident in what you do. You won't have to look for so much opinions online that most of the time they're noise, right? Everything is journaled in this Discord. Uh, if you look at it, everything is journaled in Trade Echo. The But I have like pretty sure I have like a 70% one percentage, 70% plus. Should VWAP also be considered as stop? Yeah, VWAP is also a great indicator as well. I went over a video on that. If you look at one of my technical analysis videos, I went over how to use the BT Cloud and VWAP, and we kind of went over price action, right? What we did today was kind of how to use price action to find support and resistance levels. But if you mix price action with the technical indicator video, with algo edge, with everything, you'll put everything together. So what we went over was price action and psychology, and we kind of ran the numbers, show you how mathematically why. Let's see. Speed, how I set it up for speed. The only hard part about that, Beta Life, is the market is closed, so I can't really show you on Robinhood. I would have to. I'm gonna figure it out right now how to show you, because because you can't trade option contracts on crypto. But I'll figure out a way how to show you guys right now. Any other questions before I move on to that part for everybody on how I use Robinhood effectively? I see people typing in the chat, but I see no. Can't trade futures on BTC. Yeah, but futures. Let me see. See. been following the 10% of account on a single trade strategy. I saw them for this. Yeah, if you're taking a 10% trade with of course the fat tail risk is that 10% every account, but yeah, the ladder is a lot different than um hold on. Yeah, features is a bit different than the options. Been following the 10% account. Yeah, because all right, so if you're sizing 10% of your total account, but you're having a 10 to 20% stop loss on that size, then you're ultimately risking a lot less than the initial size. You're just using kind of leverage, right? Think of it as leverage. But the fat tail risk is that 10%. That can always happen. But a 10% hit on your account shouldn't be the end of the world. And that typically rarely happens. I'll say like 1 in maybe 30 trades. If that. Yeah, I went over that. How to combine dealer edge. Yeah, if you look at my other 3 videos, how much of your strategy is just vibes and experience? I would say none of my strategy is vibes. I'm very systematic. Everything, if you see the way I trade, you will see that I'm very thoughtful on how I trade. Everything I do is typed in Darkhorse alerts. You can see it in real time. So if you really pay attention, you can see that everything I've said in these sessions I do when I trade. So everything I've said, I tend to follow it typically. Okay, I'm gonna give it like 5 more minutes here, and then I'm gonna go on to how I use Robinhood. Legend. Let's see this. Do you use any other indicators? No, every indicator you see on the screen is what I use. All right, 4 more minutes. For Robinhood Legend, it's fairly simple. For Robinhood Legend, I think it would be more valuable if I go over how to use the phone, because I know a lot of people trade on their phone. Because on Robinhood Legend, you just have the whole order, you have the whole option chain there. So, and then it kind of shows you what positions you have open. So basically so yeah, it's very simple. On Robinhood Legend, I just go to the strike, I buy it, and then I put my stop limit. I use simulated returns. Okay, simulated returns is a huge thing on Robinhood Legend. I don't know if you guys know what simulated returns are. That's how I calculate. Of course, I do some more other thinking, right? Because you can't just rely on simulated returns. That would be foolish. So I know you guys have seen this before, right? Let me see if I can pull this up. I know you guys have seen this before, simulated returns, this little thing. This is how you would calculate your contract price. You just use the key levels, right? So say if like you're trying to calculate how much your contract would be worth at this level, you do that and then you set your limit price. So say for a stop, if you're trying to stop out, I would calculate at what price. Say at this price, what percentage stop would that be? And say if I'm able to have a little more room, I could increase that limit a bit more. So that's how I do it. I put a stop limit first. Simulated returns is like right here. Everyone should be using this on every trade. You can kind of simulate Very important tool here. That's how I'm able to identify. That's how I knew the contracts were going to be $11 when that price hit. But because of theta, of course, I put it to 10 because theta decay was going to take off bits of that contract. So simulated returns is basically how I find my limit fills and stop limits. There's no other secret to it but this simulated returns. That's like the most valuable feature. If you guys aren't using that on Robinhood, then you have to start using that. And then for the stop limit, yeah, I just place my stop limit and I have a replace order ready. Yeah, simulated returns. Literally, I thought everyone would be using this, but if you don't, this is really important to use. Like you usually see it right here, and then you click simulate returns, and then you can calculate where you should put your limit fills and stop limits. Do you change IV with simulate? No, you can't. IV, I mean, it's kind of it kind of does. It does an okay job. Simulate returns. Why do you trade at SPX more than NDX? Is it the same? Is it the premiums? NDX spreads are too wide for my strategy. So based on my strategy, SPX there's a lot. SPX it's like the best place for my strategy is where my strategy performs the best. So if you guys aren't using simulated returns, start using that, and that's how you'll find your limit fills and your stop limits. That's how I find them so quick. That's how I know when I should fill, what price I should fill at, when I should fill. Combine that with this, and you're good. Yeah, NDX. I mean that it could be done, but can you elaborate on how that helps you find your fill? Well, basically, say I already have my levels here, or I enter the trade and they make my levels real fast. Then once I have these levels, I simulate the return at what the price would be at that level, and then I have um, and what I do also, so say like on the simulated return, um, the contracts would be at whatever. So say from here to here, the contracts would be at $6. So what I would do typically is I would put my fill at 5.8, not $6. I would subtract a bit to make theta. And then as price is going to that level, I adjust my limit fill to kind of get a more accurate fill. But with simulated returns, it lets me have a good feel for what the contract price would be at this level. So that's how I use um, the simulated returns to help find my limit. So once I'm in the trade, that's when I start using the simulated returns. Once I get in the trade. So I get in the trade and I use simulated returns to help find the contract price. But typically now I could kind of eyeball it. I kind of guess what the contract prices would be at, what percentages, just due to experience. But for this, without this, I wouldn't have been able to do. I've been able to have a good feel for what the contracts are going to be at. But also you got to think about it um, like okay, say from here to here, this is probably like 150% win, right? So 150%, you just do the math for your current contract. So if you take a $3 contract, 150% would be like, I think, hold on, would be like 750, I think. Hold on, let me see. Could be wrong. Yeah, it would be like 750. I wasn't wrong on that math. So you can do the math that way, right? If you want to. If I knew this can pay off 150%, then I know the contract should be around 7.5 when I'm going to sell it. And then when you start including theta, then you start taking away some money from that. So it'd be from 7.5, say it takes like 15 minutes, it would probably drop to like 7.2 on the fill. If I took a $3 contract, it would probably be $7.02. I'm already trading at one com and I receive about Streaming multi. The only thing is if I sign into my Robinhood, I don't know. I don't know how I feel about signing into my Robinhood Legend on my stream on Discord. Security reasons. Why? If I sign into this, I know there's a lot of things you can do on the live stream. I'm having a hard time visualizing how you trim contracts so quickly. Is there a way to show us your Robinhood? How do you how do you do that? I'm out here trading one kind at a time. Yeah, I don't, and also I don't even open my Robinhood Legend on my desktop anymore. I have it on my MacBook. But I mean, if you do execute on no, I execute on my MacBook. I have another screen, which is my MacBook. My desktop is this here is just strictly for the charts and this Discord. I'm having a hard time visualizing how you trim contracts so quickly. Is there a way to show you your Robinhood Legend? How do you do that? So how you would do it? Let's see. I mean, I mean, I couldn't even show you because the markets aren't even open, so I can't even do like a practice run. I don't know how would I do this? I don't know. You kind of like the way you sell one contract, you just sell um more than one, I would say. Like yeah, how you sell one contract is just put two contracts instead of one, and then you have the rest, and then you just go back and fill the other ones. I'm having a hard time. So beta life. Um, yeah, I'll probably have to stream my MacBook for that. I need. So all right, for mobile, I think it's better to stick for mobile for now. Um, for mobile, I'd probably have to do like like I don't know how to do that. Just how you would sell one contract on mobile, just try to sell two, and then you can go back to your original position and then sell sell the other ones. That's the best way to say it. Those moves feel cumbersome. Any other questions? Uh, yeah, but those. I mean, beta life. I'll go. Just stay. So if it's a faster one. Yeah, those moves feel. Yeah, it is faster on Robin. I'll probably go over. Just remind me. I'll do a session on my MacBook on how to set up your Robinhood Legend. Just remind me on that, and I'll do it. I probably have to stream on MacBook for that. Do you have any long-term investments listed? Yeah, I have a watch list. You can. I can share the watch list. My investments. I'm investing into all of this. Into all this. This is what I'm invested in. I can share it again. Let me just share this. How can I share this again? Copy link. I'll share. Okay. Here, I put it in the chat. say from a dollar range to like say you're targeting say you're at 690, right? And then you're targeting a move to 692. Probably take the 692 contract or the 691 contract is what I'd say. Okay, but what can help? I go $3. That always works. Yeah, if it goes out $3 works fine, then do that as well. The only thing is if it can probably go bad a lot quicker just because of how far out the money it is. Have to run. Thanks for this information. And thank you guys for coming out. I'm gonna end the session is gonna end in 2 minutes if you guys have any other questions. Um, what have you guys thought of the session so far? Well, yeah, superb. I hope it was pretty interactive. I don't want it to didn't want it to be too boring or anything. I wanted to make sure it was interactive for you guys on here and that I can give you guys as much valuable with showing you guys, right? Like kind of showing you guys, kind of wanted to show you guys on the chart what I'm thinking in real time. Because I think that would click a lot more than me showing like random graphics and it feeling like a presentation. It would kind of feel a bit boring, right? So I wanted to kind of go on the chart. And remember that I did put a prompt in there. Okay, Hawkeye precise. I did put a prompt in the market talk. You can plug into that prompt into a LLM, and then you can also have it explain it to you if you're a little confused on it, how it works. But it's a pretty simple prompt. What it's just gonna tell you is like basically what risk or what win, how much do you have to make. You can put different numbers in there, and it will just kind of show you how much you have to make to be profitable. Trader based on your win percentage, right? So if you're making 30% and then losing 20%, it'll tell you, and you plug in a win percentage, you can kind of see the numbers over 100 trades. So for sizing, I do have a whole 50. If you have a question for sizing, I do have a whole video on sizing and how I decide how I'm a size. Just make sure you look at the Trade Echo YouTube video. I think we went over everything. I think this might be could be the last video of our 4 video session. This could be the last video here for the 4 videos that we have up going over my strategy. We have 4 videos. First one covered risk management. Second one, I think covered. Oh yeah, how to use Trade Echo, right? The third one covered technical analysis, and now this one covered profit taking and stop losses. So with these 4 videos, I think everyone should should be really beneficial and everyone should be profitable if you follow these 4 videos and really lock in everything that was said in there. I want to give a big shout out to C Blast before I end this, because without him, without this amazing community, without this amazing platform that he's built, none of this would be possible. And huge shout out to C Blast for making everything happen and for having me here.